This is Made for More Living with Johnny Jennings, powered by eXp Realty. Online at madeformoreliving.com.
So we're in the studio today with Sarah Perkins with Blue Water Credit. I feel like I have to say it slow. Blue Water Credit.
Blue Water Credit.
And we're talking about, obviously, credit repair, but Dave Ramsey.
Do you ever listen to the Dave Ramsey show? It's like the #1 radio show in America.
Really?
Yes. It is, yes. And so do you ever listen to his show?
Oh, I do.
Because he kind of does what you do. Would you agree?
I mean, yeah, it's financial credit advice. So
Right.
it's just from a different perspective that I think different goals.
What do you think about the advice he gives to listeners who call in and say, hey, I'm in debt, I'm having this kind of problem? What do you think about the advice he gives people?
How do you see it through your credit repair lens?
So, I mean, it's financially sound advice as far as getting out of debt and not being over your head in payments. I understand that perspective, but if you're trying to get a loan or any kind of traditional financing, you have to play the credit game, unfortunately. So, to develop a credit score, you have to have, a certain number of revolving credit cards open. They ideally want an installment loan, like an auto loan or a student loan, and then a mortgage. And so, again,
So let's break that down.
yes.
About how many credit cards is suggested?
So with FICO, and that's the main player in the game still right now. They still do about 90% of the lending decisions.
They're changing though, right? Isn't there
They
a new
are
one?
changing. So they are going to be going to a Vantage 4.0, which is your Credit Karma score that people see.
Okay.
And a FICO 10T. It was actually supposed to go live fall of this year, but it got a little bit more pushback. What they're doing is they are using these new scoring models and applying it to loans over the last 30 years and seeing if these people would have gotten the financing based on like the new scoring models so
Yeah.
that they can test it out. So they need a little bit more time for that. But right now it's still FICO. For mortgages, it's your versions 5, 4, and 2 if you want to be really specific.
Okay.
But now I'm forgetting what the question
So
was.
how many credit cards?
Oh, credit cards,
Yeah.
yes. So according to FICO, they want anywhere from 1 to 5 revolving credit cards open. And that's like your Visa, MasterCards, your retail store cards where you have a credit limit. You can...
Your Mervin's credit card.
Yeah,
Mervin's. I was like, Mervin's? Oh my
Back in the
gosh.
day, everybody had a Mervin's
I had a Mervin's
card.
credit card.
See,
so
look at that.
There you go.
What if you still have a Mervin's credit card? Does that still count?
Yeah, absolutely. I think you're in trouble if you still have a Mervin's credit
Okay.
card.
You're still making payments on it?
Yeah, if you're still, you could be making payments on it. Very true. So yeah, 1 to 5 revolving credit cards open, and ideally keeping those balances at 10% or less of the limit is what they're
10%.
10%. So I know that a lot of people say 30%
That's
out
what
there.
I've heard, yeah.
What the 30% is when you go over 30%, then they penalize you. But the lower you can get it down, you can earn some extra points. So we usually tell our clients between 0 and 10% is where you want to keep those balances.
So let's say you have one credit card.
Okay.
The limit is, we'll say 10 grand.
Mm-hmm.
And you have 3 grand on it, right? Or $3,500. You're over that 30% threshold.
Yes.
Would it be better for you to open up 2 additional cards and put 1,000 on each of those?
So it depends. If you don't have the money, that is definitely a good option. But when you apply for new credit and open new credit cards, then you are affecting how long it's been since you opened a credit card, which can drive your score down, and then the average length that your cards have been open. So they want to see an average about 6 years when they take all your credit cards and see how long they've been open. They want it 6 years. So if you've only had that one card with the $10,000 limit for, let's just say 10 years, but then you open a brand new card, now you just sliced it in half. And then if you open another card after that.
Oh,
then,
the average across all of them.
yeah,
Got
so
it.
you might be dinging yourself with points there, but if you can lower your utilization, you might gain it back plus more. So that's one of the things that we'll go over with them while they're in their program
Okay.
and making strategic decisions like that. But some people just don't have the money to pay down their credit card, so that
Yeah.
is a good option. So yeah, so 1 to 5 credit cards, 10% limit, and then you're looking at one installment loan, which can be your auto loan, a student loan, a debt consolidation loan, something where you take it out for a certain amount of money, you have a fixed payment, and you pay it off.
What about like a phone? Like if you buy an iPhone, would that count as an installment loan?
It depends on if they report it to your credit. So a lot of those things, like I see Affirm and those payment plan kind of models, and they'll only report to one of the bureaus, and so you're not getting the credit for it across all 3 bureaus.
Okay.
But yeah, and then that's one of the things why Dave Ramsey, going back to him, paying your car off, paying these loans off, which again sounds financially responsible, but then you pay your only installment loan off. Now you've lost that mix of credit, and now you've actually lowered your credit score. So we'll get people coming to us all the time. Hey, I paid off my car loan. Why did my credit score go down? And it's because they lost that mix of credit. Again, it depends on, hey, if you need to qualify for a loan and you can't have that car payment, that's different. And so if your lender's telling you need to pay it off because otherwise your debt to income ratio is too high, then we have other avenues of credit builder loans that look like a loan that go on your credit, but you're actually paying into a savings account that kind of trick the system, that make it look like you have an installment loan. So there are some creative ways around it, but paying everything off and closing it, you're going to lose a credit score. So if you don't have any activity for 6 months or more, even if the accounts are open and you're not using them, your credit score can literally disappear. So I'll get lenders.
That's his goal, right?
Yeah.
Yeah. I mean, so I tried the Dave Ramsey thing, all cash, debit only, and I know what he says about, hey, it's the same safety as a credit card. Like there's all these protections to manual underwriting for home loans. But in terms of like just quality of life, like I didn't want to figure all that stuff out.
Yeah, you don't have to worry about that when you go out to buy a car. Or again, like employment background checks, they look at credit all the time for certain kind of jobs. So if you don't have a credit profile, they're going to be like, what's going on? And so it's giving these places.
I'm Reacher. Yeah. That's why I don't have a credit profile. I'm off the grid. Have you seen that show, Reacher?
Yes.
I love that show.
Yes.
So,
your credit profile is basically telling somebody a story of how responsible you are. Can you take out a debt and pay it back responsibly? And so it's showing behavior trends. And so that's why it's used for, employment background checks, and why, car loans and auto loans and mortgages, that they look at those kind of things.
And yeah, so I totally agree with you on that. Definitely have healthy credit. I think what Dave Ramsey is essentially getting at is, I mean, if I was a divorce attorney, I would probably say never get married, because I'm constantly dealing with people who are getting divorces. He's constantly hearing stories of people who mismanaged money through credit cards or other, consumer debt things.
Yes.
And so he's looking at it through that paradigm. But yeah, I don't know. Maybe a healthy balance.
Yes.
So tell us about the experience when someone first talks to you guys and they're feeling overwhelmed and stressed. What's that feeling like? And then after so many weeks or months and you're able to get them to where they're breathing above water, right? And they see some light at the end of the tunnel. Tell us that whole experience from an emotional standpoint.
Absolutely. So, yeah, we know that dealing with credit and finances, it can be stressful, especially when you're feeling overwhelmed, you don't have a plan. Most people just don't even want to look at their credit or open their bank account. I used to be one of those people, way back, 20 years ago. And so we understand.
So did Jeff.
Yes.
Right,
that's how he started. I mean, he got turned down for a bank account and said, what's going on? And
what am I doing here?
Yeah. And looked into building his own credit, and then started doing it for friends. And then it just turned into a business. But, that's what we understand when they come to us. So first and foremost, they do a consultation with our credit advisor. We're going to go over their credit report. We're going to be understanding of their situation, ask questions. What's your goal? Are you trying to buy a home? Some people just come for general cleanup. So we're going to go over their whole financial picture and just offer them a solution. I think some of these people are just so overwhelmed that they just don't know where to start. Credit can be very confusing. Like I mentioned, there's different components on how to build a credit score, and then there's all this misinformation out there. Pay off your credit cards, close them down, don't get credit like Dave Ramsey said. And so you're hearing all these different things where you're dealing with professionals at Blue Water Credit. We've all been in this industry for 10 plus years. We're watching the trends. We're we're telling you, pay these ones off. Don't necessarily spend the money and pay these off. You're not going to get a benefit from it, because a lot of people have that understanding, hey, I paid off this collection. Why isn't it deleted on my credit report? Well, just because you pay something off doesn't mean that the negative mark that you got from it disappears. Yeah, there's companies out there that will do a pay for delete, but I think it's a common misconception that, hey, I paid off this credit card and closed it. It's still there. Well, those things can stay there still for 7 years.
Wow. And is that one of the services that you can help?
Yes.
Like clean up if it wasn't filed correctly or whatever?
Yeah, so once something's paid off, then that's when we would try our dispute process, as opposed to we do negotiations where I work with somebody's creditors or the collection agencies to kind of barter a deal like, hey, we'll pay you this amount of money, and you'll also include a deletion off their credit report. Give me a deletion letter that I can then turn around and give to give to your lender. So you're not waiting the 30, 60 days for the credit report to update and reflect that. A lot of lenders out there can take that deletion letter and do a rapid rescore. And
I was hoping you'd bring that up. What is a rapid rescore?
So that's being able to submit the letter, and almost then they kind of run a credit report as if that item wasn't on there. So you get credit for that item being removed essentially on that deletion letter, and it garners a new credit score as if they ran credit that day and it wasn't there. But we know the credit bureaus can take 30 to 60 days to actually fully delete those items.
So it's just like, hey, this is what your credit's going to look like in the next 30 to 60 days, and then they can help get you pre-approved based off that.
Yeah, my understanding is they can use that deletion letter and then use maybe whatever underwriting system they have to be able to run the credit based on that item not being there. Even though it's still technically there right now, they can submit it and get that item either removed immediately or getting a snapshot of the credit score accurately as if that item wasn't there.
And so I've heard of lenders doing this, like their buyers right on the bubble, like right on the cusp of being able to qualify. They'll just tweak a couple of things, do the rapid rescore, and then they're good to go. So that's another tool. You can always reach out to a lender or reach out to Blue Water Credit, and they can help you with that. But I was literally talking to somebody last night about this. We do a first-time homebuyer webinar.
Yes.
On average, every 2 weeks, maybe once a month. And somebody was shocked. She didn't know that there was a difference between a soft pull and a hard pull, and she wasn't aware of how many times you can actually have a pull done on your credit within 30 days. Do you mind going over what that looks like? Yeah.
So you're talking about the inquiry. So there's a couple different inquiries out there. So a soft pull is typically, a lender has the ability to do that where it doesn't take a hit on your credit report. It doesn't show as an inquiry that's going to impact your score. So
which is huge. People are freaked out about that.
Yes.
It's like, hey, we'll just do a soft pull. It won't impact your credit at all.
Yes. Yeah. And my understanding, though, is you can't use a soft pull credit to be able to fully underwrite them and qualify them for a loan, but it gives you a pretty accurate view of where they're at credit score-wise.
Better than Credit Karma or whatever your credit card thing says.
Correct. And then anytime you pull your own credit, that doesn't affect your score. So if you have a hard pull, which is where a lender is pulling your credit with the end goal of offering you a credit card or a loan, then it's considered a hard inquiry, and that can drop your score anywhere from 1 to 5 points
per hard pull.
But there is that rate shop window. So with the mortgage credit score, my understanding is you can have your credit pulled within like the same industry as far as a mortgage or a lender pulling it within a 30-day period. You can have 3 or 4 of them pull it, and it only counts as one inquiry. So you're only getting dinged once instead of every single time that lender pulls it. But it has to be within that window of a period.
30 days and for getting a home loan.
Yeah, and the same goes for like an auto loan. So you can shop around for like an auto loan again. Okay. So then it just dings you once if you're shopping for a better rate for getting a car within like that 30-day window too. So, but you can't do like an auto loan and then a mortgage, and those count as the same. It has to be within the same industry.
Okay, that makes sense.
Yeah.
Yeah, but I mean, people are thinking like 1 to 5 points, 3 points. Like, that's not a big deal. But for some of these people, like who are right on the bubble of being able to qualify and not qualify, that's a big deal.
Yeah, it can make a huge difference. And then people ask me all the time, well, I'll get those promotional inquiries like where they've soft pulled their credit to offer them an advertisement of like, hey, if you call in, we can possibly give you this credit card with this credit limit. That's a promotional inquiry, so you're not dinged for that. But I tell people a lot of times the best thing to do is to go to optoutprescreen.com. I don't know if you...
I haven't heard of this, no.
Yeah, so it's a website, and unfortunately right now the way the law is written, your information is sold when you have your credit ran. So it is then sent to all these different creditors or companies that then become predatory in lending, and that's why you get all those offers in the mail.
I have heard of this. JJ told me about this.
Yes. So it's a site that you go. It takes like 3 to 5 minutes. You put in like your name, social, date of birth, but then it opts you out from having your information sent everywhere. And this is really important when you go to apply for a home loan too. I've had a person that had their credit ran, and then literally within like 5 minutes, she's getting hundreds of calls from all these different companies because her information has been sold. And then you're confused, like, is this, my lender calling me? They're kind of tricking me. Like,
they say they could do better than my lender. They say my lender's lying to me. They're planting seeds of doubt.
Yes.
And what's crazy about this, Sarah, is that now people are using AI.
Yes.
So as soon as that pull takes place, within microseconds, an AI bot is calling these people. It sounds like a real live person.
Yes.
And they are selling them, their services.
Yes. So
what's that website where you can opt out?
So optoutprescreen.com.
Opt out pre-screen.
My understanding, it lasts for 5 years, so you do have to go on and renew it. You can opt back in anytime you want in case you want to get all those promotional offers. But I know that they're lobbying right now to have it be the reverse, where you have to opt in, like everybody should be automatically opt out. So I know that's one of the bills that they're trying to put forward in Congress right now.
I hope they would do that, because I talk to JJ Mack, lender extraordinaire, all the time, and he gets people pre-qualified. They pull the credit, they're ready to go, and then they get this deluge of scammers, for lack of a better term. And sometimes people take the bait, and then they go down this rabbit trail, and it's like not what they thought it was, and then they have to come back to them, and it just costs them a lot of time and money if they would have just. Well, one more time, what was that website?
Optoutprescreen.com.
Optoutprescreen.com. Yeah. I mean, it's almost like a do not call list.
Correct. It is. It's like a do not call list for credit.
Yeah. Cool. All right. Well, thank you so much for being on the show today.
Yes.
If somebody wants to reach out, what is the best way for them to contact and take next steps with Blue Water? Yeah,
so you can always go to our website to request a consultation, which is just bluewatercredit.com, or you can call us at 916-315-9190. Again, our consultations are completely risk-free, no cost. We'll help you pull credit. If you don't have a current credit report, you'll spend about 15-30 minutes on the phone with our credit advisor, and you're going to leave that call having some kind of solution or plan, whether it be we're good for you and credit repair is a good fit. Maybe we just give you some advice on what you need to do on your own.
Yeah.
Maybe you need credit counseling or debt management, but you're going to leave knowing exactly what you need to do and kind of what the cost is. On average, we're about $199 per month for a single person.
Okay.
Average length of program 4 to 6 months, but you can cancel at any time with a 30-day notice. Some people just need 30 days and they're in and out and back to their lender. So again, it's an investment. What you end up saving in the long run is going to be way more than what you spend with us.
And it doesn't cost anything up front to get this roadmap, to know
Correct.
Exactly what to expect.
Correct.
Like, for example, we recently had a client who came to us. They were wanting to buy a house. They were living in an apartment. I think it was like 5 of them in like a 2-bedroom apartment. And the husband wanted, more space for his family. And the best they could do at the time was a mobile home. And so one of our agents was like, hey, you know what? Let's go through Blue Water. Let's build up your credit. Take a little extra time, but then you'll be able to have the real solution to your problem, like the real home you want. And they took, I think it was 4, maybe 5 months, and then they were able to qualify for a traditional 3-bedroom, 2-bath home.
Yeah,
right?
We hear stories like that all the time, and it's why we do what we do. It's gratifying to see people get into a home, especially when they've been told by everybody else, you'll never be able to qualify for a home loan. Lenders, they don't want to touch it because your credit's not good enough. It's not a no, it's just a not right now.
Not right now, exactly.
And so I encourage people, we have hundreds of 5-star reviews across Google, Yelp, on Facebook of all these kind of stories that you can check out. Again, we've been around since 2008, helped over 15,000 clients. So I think we have an idea. We know what we're doing.
And they're legitimate. Don't go to TikTok. Don't get your credit repair from TikTok.
Correct.
Get it from Blue Water Credit. Thank you again, Sarah.
All right. Thank you.
You have been looking forward to this for years. You've been planning and planning and planning. Finally, the day is coming where you can finally sell your home, retire, and move out of state. But now you're not sure if you can make that happen because you don't know if you can make the amount of money that you need to sell your home and move out of state and retire and enjoy those golden years. Well, have you reached out to Johnny Jennings with Made for More Realty? There's a reason why he's been number one in Roseville for the past 3 years, why his team has over 5-star Google reviews. Give it a shot. He has proven time and time again that he can get the most money for your home in the fastest amount of time. Or maybe you just want a simple, easy process where he presents to you at least 3 cash offers on your home in as-is condition. No need to do showings, open houses, repairs, none of that. Just at least 3 cash offers on your home in as-is condition. So no matter what your situation, if you think it's complicated, trust the expert that has tons of experience, been doing this for a long time. Just Google Johnny Jennings with Made for More Realty and get more for your home.